Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Tata Power, a very interesting company, whether it is at an inflection point or we should avoid it. So let's understand this. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Tata Power, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail on a daily basis. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up uh, on a weekly basis, 2 3 podcasts. The membership, kindly take that on the first or second of every month, because this is the cycle that it takes in. And for detailed market or company talk that you require, or one-on-one discussion you want to have with me, you can directly email me and we can work things out. Now about Tata Power. Established in 1911, Tata Power provide power solution in western and southern India. The business is to generate, transmit, and distribute electricity, and probably the largest power company currently that is available. The products include solar rooftops, solar pumps, solar panels, solar RO systems, and EV charging solutions, apart from providing normal power solutions. So I'm not saying they don't provide a normal power solution, but they are into solar domain as well. The market cap of the company is 23,000 crores, so it is a strong mid cap company that we are looking at, and one of the best power companies. If you look at the financials, then these are FY21 numbers compared to Q2 FY20. So this is Q2 FY21. The sales went up by around 6%. The profit growth was around 12%, which was very heartening to see that there is a profit growth that is being seen in the market. And we are seeing that the stock has also recovered from around 28 rupees in March all the way to 75. There's high institutional but low promoter holding. Return on equity of 11% and net profit margin of 10% is not that bad. It's quite decent considering the industry or the sector that it comes from. If you look at the performance, then stock has not performed for the last 5 years, and you can take it out that in 2014-15 it went to 100 rupees. Today, even after the move, the stock is trading at around 75 rupees. Fell sharply in Feb March all the way to 28, as I mentioned, and has recovered nearly 3x. So 75, 76 is the stock. 81 would have been 3x. So nearly 3x from those lows it has recovered. Valuations are still reasonable. I won't say that valuations have become very expensive, but you need to understand that the stock per se is not the best to buy in this market, and probably I believe that consumption sector is better to get into on a decent decline. Expectation of a bump up in demand going forward is always there, and probably when industries open up, there'll be more demand for the products. There's no doubting that. So reasons for the stock crash: high debt is one of the reasons. So debt was huge from 2008-9 onwards. So over the last 10-11 years, stock has crashed because of very high, you can say, debt on the company, and the interest burden is always there. Even if you keep on reducing debt, the interest burden rises once you cannot reduce debt for a couple of quarters. Sector went into completely, you can say, out of favor. People were looking at IT, pharma, consumption, you can say diagnostic, chemicals, but not into power or infrastructure. And even now, I won't be very gung-ho on power and infrastructure stocks to get into. I would rather buy again on major declines into either defensives or or consumer related stocks. It is a capital intensive business, and that is my biggest concern, that a capital intensive business with high gestation period will always face a lot of problems, because you don't get cash flows very quickly. You don't know how the earnings would be. It is very difficult for a normal investors to find out how the earning projection would be or project the earnings altogether. And then small cap sell off of 2 years has also resulted in fact, 3 years have resulted in total capitulation of the stock. And the economy is under stress. If economy really does well and all these sectors of power and infrastructure, capital goods really do well. So at the moment, I believe that because of the economic stress, we are seeing a lot of problems at the helm for the power sector. So what needs to be done? In my opinion, buy only if you believe power sector will revive. In my opinion, I believe that will not happen. I believe this is just a function of the market that everything has gone up. So finally, power, infrastructure, capital goods is going up because people are dearth of now ideas, and most of the stocks have run up. Keep track of numbers. If numbers keep on improving, you're seeing on the ground that the company is selling a lot, and things are improving on the debt front. Yes, of course, you can buy. But after a 3x run up, I would certainly not like to really run to buy this stock. I would prefer cash generating simpler businesses, and even if you buy, put only 5% of your total holding. So this was my video on Tata Power. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.